may this be one of the best moments of your life. You're listening to the BusinessMirror podcast for a broader look on business with Senior Editor Dennis Estopase.
Good day, this is Dennis Estopase, and welcome to Business Mondays with BM, a segment of the BM Broader Look podcast that focuses on the Philippine stock market. Business Mondays with BM is based on the stock market outlook story written by BusinessMirror reporter VG Gabuwag and comes out every Monday. Today's podcast would also feature a story by BusinessMirror reporter on private banks, Tyrone Jasper Piad. For the text version online, please go to www.businessmirror.com.ph and search for Stock Market Outlook. For the print edition, please go to the company section of the Business Mirror newspaper. Let's get on with the story. Share prices gained last week, snapping 4 straight weeks of decline as markets calmed down with the central bank announcing more monetary policy changes in a move to pour in more money into the system. The benchmark Philippine Stock Exchange Index gained 487.66 points, or more than 10%, to close at 5,266.62 points. Christopher Mangon, research head at AAA Securities Incorporated, said they saw calmer trading as investors reassess the situation after the country's central bank announced several monetary policy changes to fight the economic consequences of the lockdown against the coronavirus disease 2019 or COVID-19 pandemic. Mangon said this trend has been the same all week. They would see a sell down at the open as buyers would not be present, and then as prices would stop going lower, bargain hunters would come in and scoop up everything they could, causing sellers to walk away, which would then drive prices higher. Foreign investors were still net sellers at 3.86 billion pesos, while average trading value for the week was at 6.29 billion pesos. All other sub-indices ended on the green, led by the All Shares Index, which rose 270.85 points to close at 3,219.50 points. The Financials Index gained 43.59 to close at 1,217.26. The Industrial Index added 181.89 to close at 6,204.54. The Holding Firms Index surged 540.05 to close at 5,142.11. The Property Index was up 312.82 to close at 2,781.15. The Services Index climbed 139.56 to close at 1,177.27. The Mining and Oil Index hiked 357 points to close at 4,102.47. For the week, gainers led losers 161 to 59 and 14 shares were unchanged. The top gainers for the week were Cirtec Holdings Philippines Corporation, Manila Mining Corporation B, Liberty Flour Mills Incorporated, Omico Corporation, SFA Semicon Philippines Corporation, and To Go Group Incorporated. The top losers, on the other hand, were Bright Kindle Resources and Investments Incorporated, APC Group Incorporated, Alson's Consolidated Resources Incorporated, Keppel Philippines Holdings Incorporated, and Araneta Properties Incorporated. Volatile trading is set to remain this week as the market as many investors are still rattled by fear brought about by the COVID-19 pandemic. Broker 2 Trade Asia said that with all sectors alike joining the Bayanihan spirit as the nation goes through this challenge, the same should prevail in equities in support of listed firms' expansion undertakings. Broker 2 Trade Asia sees immediate support for the main index between 4,800 to 5,000 points and resistance at 5,500 and 5,900 points. Meanwhile, Mangun said investors are asking themselves if the worst is over or if there is more downside for stock markets. Mangun said some investors refuse to agree that this is a crisis and are treating it like one massive dip that can be turned into an opportunity. On the other hand, some see it worse than a crisis as human lives are at stake as well as economies, Mangun said. According to Mangun, the result is wild swings and colossal reversals, which has ignored any rationality and confused most investors. Mangun added that this week's prices may end lower as most investors are not convinced that we have seen the worst. Meanwhile, analysts see that investors have been shifting funds from the local bourse to the bond market, given the uncertainties in equity securities amid the COVID-19 pandemic. A report by First Metro Investment Corporation and the University of Asia and the Pacific said the bloodbath in equities and commodity market, which continued until mid-March, has investors turning to local bonds for safety and best returns. The study, titled The Market Call, noted there has been an uptick in trading volume for secondary government securities, registering at 720.7 billion pesos in February, which is 34% higher than 538 billion pesos the previous month. Trading turnover last month skyrocketed by 230.1% year-on-year. Corporate bonds market, meanwhile, booked record volume of 6.9 billion pesos last month, which is 22% better than 5.6 billion pesos in January. Year-on-year, it rose by 195.9%. Earlier, Philippine Savings Bank and BDO Unibank Incorporated listed their respective fixed-rate bonds amounting to 4,065 billion pesos and 40.1 billion pesos respectively. Earlier, Philippine Savings Bank and BDO Unibank Incorporated listed their fixed-rate bonds amounting to 4.65 billion pesos and 40.1 billion pesos respectively on the Philippine Dealing and Exchange Corporation. East West Banking Corporation issued last month its 3-year fixed-rate bonds worth 3.7 billion pesos, which came from the bank's 10 billion peso bond program. Ayala Land Incorporated earned 10 billion pesos from the issuance of its retail bonds last month, the proceeds of which are allocated to finance maturing loans and general corporate matters. Just last week, the Bank of the Philippine Island raised 33.9 billion pesos, surpassing the initial target size of 5 billion pesos by over sixfold from bond issuance. Each bond carries interest rate of 4.05% per annum and has a tenor of 1.5 years. Rizal Commercial Banking Corporation also announced last week that its 3 billion peso bond issuance was subscribed by over 2 times after a 3-day offer period. Meanwhile, BDO decided to delay its 5 billion peso fixed-rate bonds issuance due to the Luzon-wide enhanced community quarantine amid the COVID-19 pandemic. The bank has not yet disclosed when it will push through with the offering. For the stock picks, broker 2Trade Asia said, telecommunication firms Globe Telecom Incorporated and PLDT Incorporated are set to benefit from the Luzon-wide lockdown, as many people stayed at home with nothing to do and just used the internet. Both Globe and PLDT separately noted sharp rise in data traffic of between 15% and 20% this month, the broker said. Of the two, Globe should enjoy better windfall as mobile data contributes 48% of top line versus PLDT's 34%, plus having limited exposure to enterprise at 9% versus PLDT's 25%, the broker said. The broker said valuations may improve in the near term. Finally, they underscored that Globe and PLDT have been go-to dividend plays prior to the pandemic. There is enough reason to believe that payout will remain at least unchanged and the recent rout should materially offer higher yields. Globe closed Friday at 1,949 pesos and PLDT was at 1,070 pesos.
Thank you for listening to the Business Mirror podcast. For a broader look on business, follow us on Facebook and Twitter at Business Mirror. Until next time.